Okay, I think we're good to go. Hi, welcome. Good morning, everybody. Hope everybody is well. This is Monday morning here on the 18th of May, I think. Crikey, we're 2 months into lockdown, although it's not locked down so much anymore because people have been let out here in England. Not so much in Scotland and Wales, but there we are. We've been let out. Apparently, the beaches are quite busy this weekend. But enough of that. Let's talk about the mortgage world and the financial services world. Welcome to your mortgage live stream. I'm Paul Archer for you. So, what have we got planned for you this morning? Got a few topics for you to update you on what's going on. Got some interest rates thoughts and some price movements on housing as well, which might help you along the way. And we've got some skill sets on listening skills. I've got the 5 diseases that afflict people when they're supposed to be listening. Maybe the word disease is not quite what we should be using along the way, but hey, what can we do? So let's talk about the marketplace at the moment. So they say it's business as usual out there on the mortgage market. Is it? I think it probably is. Signs are good for the mortgage market. Lending is up. The footfall is happening, particularly on new home sites as well, which is all good news for everybody as well. The furloughing is going on until the autumn, so maybe mass unemployment may well be reverted or prevented from happening during this recession as well. And of course, builders are back. We had a few builders in the area on Saturday and Sunday, a few skips turning up on Saturday. So maybe the economy is beginning to move very slowly. We don't know, do we? I heard a metaphor, a couple of metaphors at the weekend about this lockdown, this coronavirus recession that we've got going on. It's a little bit like flying in an aeroplane, isn't it? If you've ever been on an aeroplane where the engine's cut out. I don't know if you've ever had that pleasure, but you're flying along quite happily and the engine's cut out. Of course, a jet will then glide. It will glide quite nicely. It's only after a period of time that the gliding and the altitude gets lower and lower. And that's what's pretty much happening. We were jetting along quite nicely. The engines were cut out and we've been gliding the last month or two. And only in a few months' time do we see what's actually going to happen. I think that's not a bad little metaphor. Another one that somebody gave me the other day was stopping at a level crossing. You're in the car, you're driving along, you stop at a level crossing, and you have to wait. The gates go down, and you have to turn off the engine, get on with something, listen to the radio, whatever it is, or go on and check your texts and your WhatsApps and things until the barriers go up and you can move forward. That's not a bad little metaphor of what's going on as well. I don't know really. A couple of things going on. The sales process of many mortgage advisors is changing, of course. Zoom and Teams are all becoming the way to talk to people. If you haven't looked at your sales process, you need to take a look at your sales process. Where in that sales process can you digitize things? Where can tech take care of my sales process? That's the one that you're looking at as well. And obviously Zoom calls and Teams calls are what's at the moment. Everyone's using those and we'll continue to use them once social distancing has stopped. And I was reading about a company called Alt Space VR. What they do is they use virtual reality to create a virtual meeting place for you. So if you're trying to get everybody to work from home from now on, and you're going to meet up maybe on a Friday, you can actually have virtual meeting places now. We have virtual rooms where you can meet up via Alt Space VR, it's called. Quite a useful little website to maybe have a look at. Enough of that. Let's talk about some important topics then. Let's get on to a couple of topics. One topic which a lot of people are asking about is house prices. So what's going to happen with house prices over the next 6 months to 12 months? A lot of people are getting really worried about it. And it's one thing that will put people buying and selling properties is house prices coming down. Now, the thing about mortgage broking, and we'll call this one house prices. I'll give this one a proper title for you, house prices. And this is to do with the CMAP as well. So if you're looking at your CMAP syllabus, you do need to understand how house prices move. Now, if you're a mortgage broker, mortgage advisor, it's not so much house prices that affect your business, it's transactions. It's the mortgage transactions, it's the number of people buying and selling property. And it's the mortgage holders in existence, so the number of remortgages available to you. That's what will make your business. If house prices go down, that's not actually really going to affect you, although it will affect the demand to buy property if prices start to come down. So what is it then that creates house prices? Well, if you've done your economics at some point in the past, of course, you know full well that it's supply and demand. Supply and demand is one of those economic sort of principles that lasts the test of time, because anything will go up or down in price according to supply and demand. If supply is very readily available and demand is readily available, prices will be stagnant. If demand increases and supply stays the same, then prices will go up. If supply is increasing all the time and demand is falling, then prices will come down. And that's the same with house prices. So what you've got to look at is what's controlling supply and demand at the moment. Now, back in the early 90s, when prices of properties plummeted, I remember buying a house in 1989. And within a 2-year period, my house price had dropped by 25%. But there it's very different, because what happened then is supply of property was plentiful. There was loads of people trying to sell their houses in 1989, 1990, because they thought they'd be able to get good prices for them. But demand fell through the floor. Very few people wanted to buy houses. The tax relief situation had changed suddenly. So there you had massive amounts of supply, very low demand. And as a result of that, of course, prices came down. They plummeted. Will we have the same thing again now? Well, it depends how you see things. So what's affecting supply, first of all? Well, the things that affect supply are new builds. How many properties are being built at the moment? There's only so many properties can be built. So of course, supply itself is keeping relatively stable. It's not increasing much at all, because the number of new builds are very low. In fact, when builders build new developments, they only release a few at a time anyway, to keep prices high. They're not daft, are they? They're not suddenly going to build 3,000 houses and put them all on the market, are they? Because that will reduce prices. And what else has happened? Vendors. Well, you've got a few vendors still selling, of course. There's not many more than there was before. So people wanting to sell houses, there's still quite a few people wanting to sell, but not huge numbers. So supply of property is kept at bay as well. Are there people who've been renting? In other words, ex-landlords wanting to sell their properties? There's a few of those, of course. Renting itself doesn't quite have the same allure or traction for part-time landlords anymore. So there's a few more people putting their houses on the market who previously would have rented the property as well. There's a few companies now building factory houses. Legal & General are big at that at the moment. So these are where houses are built in the factory and then transported out to site, because that does depend on the amount of land available, of course. And that's down to planning permissions, or the local authority, and land. Now, planning and local authorities, they're not releasing more land than they've ever done before. So I don't think for a moment that they're actually releasing a lot more land, because they're not. So that, of course, in itself will increase supply. And I know the last one for you, downsizers. Let's just squeeze that one for you. Are there more downsizers on the market? In other words, elderly people typically who are looking to downsize, in other words, sell their big pile of bricks and move into a smaller bungalow somewhere. That in itself will increase supply. So you've got to say to yourself, is the supply of housing increasing as a result of these factors? And it's not really. Supply of housing for sale is pretty much the same as it was before. So what's happening to demand then on the other side of things for you? Well, first, are there a lot more first-time buyers around? Yes, there are. There are more first-time buyers. There's more people that were renting before who now want to buy their own house. Have they got the money to buy and the confidence to buy? Well, that's the issue, isn't it? First-time buyers are very fickle. If the confidence isn't there, they'll stop buying. But there seems to be a pent-up demand for first-time buyers. It was earlier this year anyway, people looking to buy properties. Are there many landlords wanting to buy properties, do them up and rent them? Not that many more than there was before. So I don't think landlords is increasing demand really. Interest rates. Interest rates affect the demand for mortgages, which ultimately affects the demand for properties. Are interest rates too high to affect demand? They're not. Interest rates are rock bottom, and they're going to be for a number of years. So that in itself will encourage people to take out mortgages, because monthly payments are much lower. In fact, a mortgage payment is a lot lower than rent. People know that. Obviously, you have all the other factors that go with it as well. So interest rates is not a problem as well. Again, mortgage availability. So lending availability. There's plenty of lenders still. The main banks and building societies are awash with money from the Bank of England. Specialist lenders are coming back in again. And criteria, is criteria still easy peasy? Not as much as it was maybe, but there's an argument that self-employed people are going to struggle to borrow money, and I get that totally. But the criteria, generally speaking, is quite loose. People can still borrow money. You can still get 4 or 5 times salary to borrow money as well. High percentage lending is back in again as well. Not massively high, but people can get mortgage availability if they want to. Back in the credit crunch 10 years ago, of course, there was no money to lend. That's not happening now. There's plenty of money available. The big one, of course, though, is jobs, confidence, the economy. That's the one that affects a lot of people looking to to build demand to buy properties. So for example, if you haven't got a job, you're not going to go and get a mortgage, are you? Because you can't get one anyway. So if you're unemployed, that's going to cause problems. If you're not confident about the future, you'll probably put off buying and selling a property. That's the thing that will damage demand. Of course, demand will then fall as a result of that as well. And we don't want demand to fall, do we? That's the whole point. So the economy itself could cause some issues around demand as well. The other one, of course, is property demand. So out of city demand is increasing dramatically. So house prices themselves are not a national thing. They do have regional variations. So, for example, there's companies now who've decided not to have their people working in offices anymore in the centre of towns. They've scrapped their offices and they're moving people to work from home. That's totally a good thing. So what's happening there is that people realise they don't have to commute anymore, so they can buy a property outside of the city at a lower price, of course, enjoy a better quality of life possibly, and not have to commute for 2 hours every day to go to work. That, of course, will drive up prices in the area of those properties. I was reading about Savills, who were researching into Winchester, places like that, Nailsea, down on the south coast, where these areas prices are starting to trickle upwards because demand is quite strong in those areas because people don't need to move into town anymore. You might find that property prices in cities will come down because the demand for city dwelling is going to fall. Remember, it's all about supply and demand, so out of city variations. So really what I'm saying then is demand is still fairly okay. It may fall slightly, demand, it may do, with jobs and confidence in the economy, depending on how things bounce back in the autumn, of course. But furloughing is going on until the autumn time, so people have still got jobs. There's this aeroplane scenario is probably right, isn't it? Because we're still cruising on no engines at the moment. Supply is fairly stagnant. Supply is not going to suddenly increase. So there's not that much supply on the market. Demand is maintaining itself relatively okay, particularly in certain areas. So house prices in economic terms will not come down. So when you read about it in the paper, prices of property plummeting, that's probably just the newspapers trying to be a bit dramatic. I don't think you'll see a lot of house prices falling. You may not see house prices going up for a little while, but you won't see them falling, which actually will cause a lot of confidence in the market. Bit of economic theory for you. Hope that's been useful. There you go. Let's pause on that one then, shall we? So house price is always an issue, aren't they? House prices, people like to know their house is going to maintain the value, and they will do. And remember, it's quite interesting seeing different areas of prices, particularly out of town. I think that's going to be a big issue, that one. Prices out of town going up more. I live here in Cheltenham, and it's not really a commutable area, although it takes an hour and 45 minutes to get to London. You'd be in Birmingham in sort of 45 minutes from Cheltenham. Will people move into Cheltenham because they don't need to commute into town like Bristol or Birmingham or London anymore? Probably. I think the demand to live in the city because you work in the city may well succumb in the future, possibly. We'll see how it happens. Let's get into the topic for you of listening for you. I want to talk about the 5 listening diseases and the cure. So Dr. Paul here is going to talk about listening for you on Livestream. Now, listening itself is probably one of the most important listening diseases, probably one of the most important skills that a mortgage advisor can have, particularly online using Zoom or Teams or some kind of video technology, or for your face-to-face with clients. Listening is one of the salt and peppers of mortgage advising, because you've got to be a really good listener. You've got to listen to clients. The whole point about fact finding is you get them talking to you and they talk back and you listen to them as well. So I've got for you 5 diseases that infect mortgage advisors, and see if any of these resonate with you as I talk about them for you. Because I'm going to give you the cure as well for these as well. Maybe a little bit too connected to coronavirus, this one as well. But what's the first disease then? Well, the first disease is what I call interruptitis. Interruptitis. There you go. Interruptitis is my first disease. Now, my daughter, who's 20 now, she used to have this disease when we used to have dinner with the family, and she was constantly interrupting her mother. Her mum would talk, and before her mum had finished, Beth would interrupt. The reason was she was excited and she wanted to talk, but mortgage advisors do the same thing. The customer's talking to them. They've heard it all before, because if you do mortgage interviews or mortgage appointments, you've probably heard most of the situations before, because you have. Therefore, you tend to interrupt and come in with the answer quickly. And that's known as interruptitis. The best thing to do with interruptitis, if you ever get it, is to give yourself the wait pill. That's the way to cure it. And that stands for why am I talking? So if you find yourself interrupting, just wait. Wait for them to finish and then chip in. Online as well, it's very easy to override people, interrupt people as well if you're on video. So you do need to wait a second or so before people have finished. Then you should come in and talk as well. It's slightly different online as well. That's the first disease for you. What's the second one then for you? The second one is interrogationitis. Interrogationitis. Quite similar to interruptitis, but not the same at all. Interrogationitis is where you are so keen to talk to the customer that you throw a question at them and then they answer, and you throw another question at them and then they answer. Although you're trying to fact find and listen to their answers, your questions are quite pingy. They're almost like interrogation. You keep firing more and more questions at somebody, and they end up being closed questions as well. And so you end up interrogating your customer, which is very, very dangerous indeed. So what's the cure for interrogationitis if you ever find yourself asking too many questions? Well, the key there is to sugarcoat the questions. So you take some pills that are sugar-coated. Now, sugar-coating, this is my phrase really, for softening your questioning. So ask a question, but soften it so that it opens it up more. So use pre-frame. So may I ask? Use your tone of voice, may lift it slightly. Use your non-verbal nods and ways of getting people to talk more rather than asking another question. Come in with a, yeah, I see, that's interesting, really. Tell me a little bit more. These things, verbal and non-verbal nods, particularly if you're on video, use your face a lot. So eye contact and nodding, really. Use your facial expressions if you're on video, because remember, people can see your big face there on the screen. And that gets rid of interrogationitis. Okay, what's the third disease for you? I like this one, it's my favorite. Premature solutioneering, this one's called. Premature, there you go. Solutioneering. Do you like that one, do you? Premature solutioneering. Now, this disease I've seen in many mortgage advisors. It's because they know all the answers. They've heard it all before. So when the customer's talking, and maybe they're mentioning the problem, they already know what the answer is, so they come in with the answer. They're solving problems before they've actually investigated them properly. The cure to this one is just to hold on, hold your tongue, bite your tongue, let the customer finish, and when they finished, only then can you then come in with your solution. I had it this morning on a live stream I was doing this morning with some mortgage guys. Somebody was talking about repayment mortgage calculations. They asked this question, and I knew the answer as soon as they started the question, but I stopped myself from butting in. I let them finish, clarify the question, and I answered it for them. So premature solutioneering. You've heard it all before. There's only so many questions you're going to get in the mortgage world, so be careful that you don't sort of kind of come in with the answer too quickly. It's not good. It's not good. Here's my favourite for you. I like this one. This is an old Coke that we used to have back in the 70s, showing my age there, called Tab. So if you remember, it was a calorie-free Coca-Cola. It was disgusting. It was absolutely revolting compared to what you get now, Pepsi Max or something. Tab stands for there's always a bigger boat. There's always a bigger boat. And you, well, what's that got to do with listening? A lot, actually. I was I was chatting to sort of friends. We had a quiz night at the weekend, and one of my friends he's a bit of a show off, really. And when you say something, he's always got something else to say on the matter, or something better to say on the matter. So if you're talking about his your new car, for example, you just had got to have a new car, he'll always talk about his new car, which is always bigger and shinier and better. There's always a bigger boat. And what happens here is that the customer's talking to you or saying something or other, and you come in with some kind of phrase or statement about yours is bigger or better, or I've got one of these, or I've got a better one of those. Just let the customer talk, or let the person talk to you, and don't come in with your bigger, shinier version as well. It's an awful affliction. You just got to stop it. Just save yourselves a tab. There's always a bigger boat. It's quite a nice one, that one, isn't there? Last one for you, and I'll squeeze this one down here for you, is question absenteeism. Absenteeism. Question absenteeism. Now, this is a particular element for experienced mortgage advisors. And I'll give you a story how this one came about. We had a barbecue before lockdown. This is last year. And we had some friends came around. And I was chatting to the guy. I was cooking up the burgers and the steaks. And the two girls were talking in-house, and I was talking to the husband. And he asked me a question. He said, well, what is it you do, Paul, for a living? And I was just about to tell him. Of course, he immediately started coming in about his business trips that he did, because previous to that, I was asking him about his job and what he did. And I was asking lots of questions, and he was telling me all about what he did. And suddenly he turned around and said, what do you do, Paul? Before I could answer, he came in with more about what he did. That was, he had caught the disease of question absenteeism. He didn't ask questions. A lot of people don't, do they? A lot of people just tell you stuff and talk to you about their life and about their tabs and things like that. They don't actually ask questions. And I've seen brokers do that, where they don't ask that many questions. They just tend to talk too much about mortgages and financial services. I expect the customer to appreciate that. And the way to get around that one, of course, is just to bite yourself from talking and just ask questions. That's question absenteeism. So there's 5 diseases for you. Remember to take Dr. Paul's cure, because you don't want to have any of these diseases when fact finding or dealing with customers. The key is to listen to people. Listen carefully, politely, succinctly. Let them talk to you, particularly in a fact find situation, and that way you get all the information you need. I hope you found that useful. You like that one, did you? I quite like that one. I like tab. There's always a bigger boat. You always meet people, don't you? Who've always got something better than you, or bigger or shinier. There's always a bigger boat. It comes from the story about, of course, if you go have a look at yachts in the harbour, there's always somebody who's got a bigger boat than you somewhere along the line. Hey, hope you found that useful. I'm going to wrap up now. Hope you enjoyed the live stream. Mortgage market's looking pretty good. Housing market's looking much, much better now as well. The sun's shining. Maybe we'll get out of this virus business. I don't know, at some point, but we're allowed out a bit more now, which is great news all around. But we're getting on well with this video stuff. It seems to be working well. Virtual reality is coming on as well. Enjoy the rest of your week, guys. We'll see you all next week. Bye.